I'm just seeing a little bit of a pullback to my level. Now I've got the pivots here, but it might be that I need to take profits, so I might have to close down the trade. I've just heard the news from Yellen that she has rowed back on her statement yesterday. Now, who's this work? I'm not exactly sure who you are. I've let you in the room. Normally we only allow people with 2 names, but I'm hoping that that might be somebody that I know. I don't know. So I'm just going to watch the Ftse just briefly. Now I will quickly check the pound breakout trade. Now let's see what we've got. Let's see what we've got. Well, this is trending. Even if we were to bring this onto a shorter term time frame, this is trending, so this is no good, and actually looks like it's going to be trending to the upside as well. Good morning, Ainsley.
Hello, Ash. How are you?
I'm all right. How are you?
Good, good. Well, it's a bit soggy here, but I'm much better than I was on Monday morning, I can tell you.
Oh, fantastic. All right, that's good to hear.
After having all the boys here, yes,
Oh, yeah. What was it like? Was it good?
it was good to catch up. Yeah,
Oh, brilliant.
it wasn't good getting up and doing the school run when they all left at 2 a.m.
Yeah, no, I'm sure. Okay, so
Monday
I've got my eyes on things, Ainsley. There was some developments overnight. Actually, some
morning.
fairly fascinating moves in the market yesterday. There is selling pressure, and I think the selling pressure is pretty significant. Now, the question for me is it likely to go down just yet? I might have a really good price on this Ftse, but it's possible that we float around for a little bit longer. So I might take the profit. I might close the trade up, but I'm just going to check the open in the next minute and a half. The pound looks to me like it's going to strengthen. The dollar looks like it is going to weaken.
Yeah.
So this isn't a pound breakout trade by any stretch, but you can see that we are through the trend line here, and potentially. I don't love it. I mean, I was going to call this an inverted head and shoulders, which it kind of is, but only if you kind of start involving this area here with this area here, because that gives you the symmetry. This big tail on the left-hand side would be problematic for that pattern. So we might be better off saying that this is probably more of, let's see what we've got. It's either in this area here. Looks like a little channel probably on the pound. Now we'll look a bit further into the pound later on, just after I've managed this Ftse trade, and see whether whether we can get a longer term opportunity. Markets are interesting though. That they keep attempting or threatening to break lower without getting any follow through yet. Now I wonder whether we might just be waiting on the numbers that we've got coming out. We've got ISM today, along with the jobs data. We've got ADP, and then obviously we've got non-farm as well at the end of the week with the average earnings. Now I wonder whether we're on a little bit of hiatus until we see those numbers released. So I'm not 100% confident we're going to break down just yet, and I might take the Ftse trade as more of a short-term opportunity, even though I have to say things do look like they are shaping up for some downside. What I don't like is the lack of potential follow through. The VIX jumped yesterday off the back of Yellen's statement, but then they just fell away again. So I'm not sure what's going to happen there. So I'm going to watch the Ftse and just on the open, and then we will get to all the stuff that's going on there, Ainsley, with copper. And I see those bond yields are just decreasing a little bit. So I guess we're back. I know you've you found a new friend in copper, but the question must be posed about gold. Is it still a potential opportunity or not?
Well, we can talk about it once you get yourself organised with the Ftse, but gold had an
Okay.
amazing move last night. My trade was actually, I had some other trades running, and it was as simple as I went, right, okay, I'll just go to the bathroom, and I came back and I just went, what on earth happened? So it was heading up towards 1800 and had retraced back. It was sitting around 1794. I went to the loo and it had dropped to sort of like 1773. It just like $20 just in about 5 minutes.
Yeah, yeah.
So
I've closed that Ftse trade. I've closed that Ftse trade, so we are free to talk now. So let's talk about that then.
Yeah.
So what was going on then? So we saw gold.
Okay. Chuck up the
Where
S&P. Let's have a look at the S&P first, because it
Okay.
was the one that moved first.
Yes.
There we go. So
Yeah, and it looks negative as well, doesn't it? I mean,
it dropped away. Tech reports.
I suppose this is where it gets interesting, isn't it? A massive drop to the downside,
Yep.
but yet again, a big bounce, back up again, and no real follow through. So the statement from Yellen, it appeared. You know, I saw the market move initially. There was a big drop to the downside initially because China flew over Taiwanese airspace, and
look, I think they're grasping at straws. There was quite a few. There was a lot of commentary around that time, and it was some of the tech companies that reported, and Chinese fighter had flown through Taiwanese airspace, and then there was something about Ferrari's doing something. I mean, Ferrari can't move the blooming market, can it? But when we see that kind of move that you're looking at there, that very, almost vertical drop, what happens is that you get into a situation where there's people having to scramble. Don't forget, everybody's been top heavy. Everybody's been buying.
Yeah.
There's going to be people who must be looking at having to cover some positions, margin, whatever. And we saw this previously last year, where there was a big move down in the stock market. And gold and the stock market have always been inversely related. But what we saw last night was this filthy, wicked move in gold around about the same time. And what happened, I believe, is that it's people selling to cover. We've seen this before. We've seen this movement happen before. So if you have a look at the gold.
Where are you, gold? Where are you hiding? There you are. Yep.
And even if you look at that straight down, and if you go down even to a 5 minute, look, I only went down to a 5 minute chart because I just could not believe it moved. It moved that quickly, and it did.
Yeah.
Look at it. And that was when I went to the bathroom, by the way. I was like, oh, what?
So if we mark this up, see what this suggests to me. Let me just mark this off. So if we mark that off and then just bring in the S&P again, as it thinks about a 5 minute time frame. Actually, the S&P started moving a little bit before that, didn't it? There was a big drop down at that point.
Yes,
the thing is, do you know what I tell you what I was thinking about yesterday is that you may well be right. It's possible that the Taiwanese story, Taiwanese story was a non-event, which I'd agree with. But what I would say is that there's a suggestion that the market is almost looking for something to give it a reason to sell off. That's the way it appears to me. You know, we do seem, as you say, like everybody's basically been buying, and we have seen some nervousness in this area. Now the S&P is below the weekly pivot. It managed to bounce off the monthly pivot, which is really the obvious place to take profit, I guess, on any trade to the downside. But yeah, it was interesting to see that almost these non-events created something so significant. Now I know those Yellen comments also spooked the market, but that seemed to be later. The market had already given a bit of a drop before then, and then when was it that the US opened actually down here? But a big bounce back. I mean, she's rode back on those comments now, and and suggested that it's really nothing to do with her, which is not. And also, I think looking further into that statement that she did make, I don't think the market necessarily perceived what she was saying accurately, but it's there seems to be a lot of knee jerk going on. There's a lot of very nervous people.
Yeah, and there is that nervousness happening around at the moment, and it's just, as you said, nothing really is getting any traction in any direction.
Yes,
and it's really, really annoying.
So let's just have a quick look at the pound, because we were looking at the pound as a possible breakout. Where are you, pound? Oh, I'm having to flip between different brokers, and I'm not used to using this one. Okay, so the pound has broken out of this particular level here. Now I'm just going to bring this up onto a different chart so I can analyze it a bit more. Because we've got seasonal biases on the dollar, and seasonal bias to the upside, and we've got seasonal biases to the downside for the pound. So let's do some work on the pound to start with and see what we've got, because I think that there are probably people that are trying to shape up for some downside with the pound. Now, looking at this on the monthly, there is this level along here, which it could be a little bit lower, it could be a bit higher, but it's in this region. Actually, I prefer this. Unable to get a close above that particular point at this stage. Big move here, big bar here as well, suggesting that there is some weakness up here. Even though we'll have to look at oil in a moment as well, Ainsley, because I see that's back on the move to the upside. Yeah. So big move here with a pound, and that's suggesting a little bit of weakness. Lots of confidence going into really from the back end of the year. Actually, from February last year, there's been a big confident move with the pound. So it's due a more significant pullback, probably from this thing here. Now, if we look at what that pullback might end up being, it's had a 38% retracement so far, and it's bounced quite well. Now, that would be indicative of a strong trend. But I'd prefer to see it back here. Now, the 50% looks better, because at least at the 50%, you actually get a test of some of these kind of breakout prices along here. So I'd like to see the pound back here before I was comfortable saying it's a long and it's time to pull the trigger on it. With a seasonal aspect of it, it would suggest some downside. The last 2 weeks have been suggesting of some downside as well. Now, this is the sticking point, I suppose, with the market, and it is the slew of data from the US. So we got on Wednesday, we got the employment change, ADP employment change, ISM services PMI. I thought it was quite telling as well that the manufacturing PMI from the United States was a stellar number, but it did show some contraction from the previous month, which suggests to me that maybe the expansion that we've enjoyed is possibly subsiding somewhat. Maybe that's what's starting to happen. Maybe we are just starting to slow down a little bit. Now, we've seen some stellar earnings out of the United States, but is it possible that the market will start to react because of, they bought that stuff up because they were anticipating the earnings to be like this, and now we're starting to see some possible slowing in the growth. Is it time to take a bit of profit and say, let's recalculate and recalibrate, because we're not likely to get another earnings season quite like this one. I don't know what your thoughts are on that, on Ainsley, but that was what was niggling me when I was kind of looking at some of the numbers from the ISM numbers. I was thinking, is it possible that we've hit a bit of a peak and it's time to kind of pull back a bit?
Well, you say that, Ash, and then people will take profit, obviously, when it's too good to be true. Don't you get a lot of the stimulus checks are now out in the market, out in the consumers' hands? Yeah. Firstly, and secondly, the stimulus coming down the track with these companies anyway would seem to suggest that there is going to be a further stretched with these companies. There is going to be further growth. That's what they're looking for, hence called stimulus. And what the government's throwing at it, how many $1 trillion into the economy? So how is it that you can't? You look at it from, okay, it's reached, and you naturally say, oh, can't go any higher. But then you say, well, what's the purpose of what Biden and the Biden government is doing with putting the country into a tattered debt in order to get this whole thing up and moving again? So you say, well, it's quite strong. I mean, I heard rhetoric and commentary last night about S&P going to 4,600. And you're just like, really? Now, I know Gordon Scott has us, what I think it's the 14th of May pegged for a retracement on the S&P and Dow. Yeah. On the Dow as well, on equities in general out of the States. And that theory he's had that theory for quite some time. Now, how deep that retracement will go, don't know. If it's going to be shallow against a backdrop of the government and companies doing nothing but ramping up what they're doing, it's hard to say.
Yeah.
You know, it's really hard to go, well, actually, there's got to be a correction. And I agree, absolutely got to have it. It's like the pound. You look at the pound and you look at those last 9 weeks.
Yeah.
And they've gone sideways.
Yeah.
No, it's like looking at a gold chart for a while.
Yeah, well, I suppose this is my point, is that is there an anticipation now that we are possibly going to see some of the earnings numbers in the next earnings season not be quite as home run, you know, because they've been so astonishing this time around that that can they continue to beat those, you know, extraordinarily high numbers? And you'd have to say no at some point. So that would leave you in a position where you're holding a stock that is not outperforming in relation to the price that you're seeing kind of going and going and going. So is there a point that people go, actually, that's probably about it for this particular round? Let's take some profit off the table. Let the market come down. There's no doubt we're still in expansion, so there's no doubt that the stock market is likely to at least see these highs if it comes down again, but potentially higher, because we are in an expansionary phase, and we seem to be going in the right direction. But is it time maybe to sort of say that, well, the next earnings probably won't be quite like this one, so to expect another 10% jump in the S&P is probably unlikely. No, I don't know, but I'm just looking at some of the numbers. I had a really good read through that ISM report, and the other significant aspect is, and obviously you've started to look at copper now, but the other significant aspect is that commodity prices being where they are is going to eventually start to hit the earnings possibilities and potentials that these companies that are involved with commodities are going to have, because they're having to pay higher prices. And also this brings us back to the inflation picture, and it doesn't appear to me that the inflation deniers have got much of a case right now. You know, we had that Suez Canal situation, which is pushed up freight prices. We've got overextending copper prices. Oil has bounced back significantly. So eventually, you know, that's got to filter through. That's got to filter through to the general market, and it's got to filter through to people that have got some sort of interaction. And everybody's got an interaction with oil, because they've got to move their goods from one place to another. So there's got to be some shaving off the top line when those expenses come in.
Yeah. I mean, I get what you're saying with, you know, they can't keep saying that with the commodities increasing. You know, what is it you buy when commodity prices increase? You look at not taking the consumer side of things. When commodity prices are dropping, you look at the consumer side, because their cost of goods sold is diminishing, right?
Yeah.
So, yeah, I get that inverse relation. commodities are increasing. However, is it because of the old model, or is it, for example, like looking in the precious metals sector? And I get your point, goes to your point exactly with oil. Things are stimulating again, and the economy is on the run. So therefore, there are more planes flying. There's an increased demand for oil. But then we look at things like the copper, the palladium, the nickel, and they're the ones used for the batteries. And the use and the demand for batteries has changed. That landscape has changed. That geography for that demand has completely changed over the last 5 years. Yes, they're saying there is a glut of copper at the moment, but the price is still going up.
Yes, it is.
It's
I mean,
exceeded 10,000.
Unbelievable. 10,000.
Exactly. But it is a main component in batteries that are needed for our changing landscape of we're not relying on fossil fuel. The transition, we're in this transition period of batteries have to be made. It has to be stored somewhere. We can talk about it as, we're all going green, but I said to Jules the other day, we're talking about all of a sudden electric cars, okay, EVs, great, no problem. And then by 2030, I think it's Norway, or you won't be able to buy a petrol car in Norway. Forget it. The next couple of years, it's over. But if you've got a petrol-driven car, you're going to have to look at how to either convert it or get rid of it. It becomes worthless. So we've got an evolving situation with major energy that will require these components, which the demand for those things weren't there at this level before. Oil's different for the time being. Because it will require jets in the air next week. It will require, although we've had so many stop-starts with travel bubbles and all the rest of it. And there was a case this afternoon, actually not far from where I live in Sydney. It's not related to anything. They're trying to work, they're panicking because they do genomic sequencing. I don't know where he's come from. He hasn't been in hotel quarantine.
It is. I make you right. It's a really strange. I feel like we're in a very strange environment right now. While we appear to be outside the pandemic, but the actual medical reports don't suggest that we're quite there. I mean, certainly India's suggesting now that the fatality is going to potentially double. Which means that it's still raging in an important economic part of the globe. So it's really strange. And then obviously we got this chip shortage story going on as well, which is also fascinating. And I haven't looked deeply enough into it. I've really heard headlines and just kind of like piecemeal on that particular story. But I will have to look into it at some point, because there's got to be some. I mean, I know it's affecting the car industry, but there's got to be some other industries, and I really like that stuff, because if I'm looking to go long on a stock, then I've got a perfect hedge with a car company that makes chips that just can't sell any cars. They surely that their particular stock is not going to do particularly well. Just to kind of get back to the numbers for the week, so we're not continuing to look on this screen. We've got Spanish unemployment change was weaker than expected by the looks of things, down 39,000. We got Spanish PMIs up 54.6, so that's good. So it looks like Spain is starting to do better. Italy, interesting. I've got a friend living in Italy, told me that they were going into lockdown again, but I'm not sure if that's been a newsworthy item. So I'm not sure whether that's true or not, whether he maybe made a mistake, or maybe it was suggestive rather than something that will be implemented. We've got French PMIs as well later, and German PMIs and overall Euro PMIs that will be due out in around about 40 minutes. So we can probably just look at the Euro PMIs to see what kind of health that Europe is in. But if you look at the comparison of where we're going, Europe was just about an expansionary zone here. Final PMI data, let's just focus on Europe, but it was just about in an expansionary mode. Now we've seen a huge jump in the Spanish number. So that would suggest that this number is probably going to be a jump as well, a 6% swing there. So sorry, not a 6% swing, a near a 12% swing by the looks of things to the upside. Economic forecast will be later on. So none of this is going to be particularly important, but none of this is going to be particularly price moving probably. But this is where things get interesting, and it's from the States. Yellen saying what she did, I think, just adds fuel to the fire of what Jerome Powell said most recently about employment numbers. You know, that's where they're going. That's where the focus is on. Is the stimulus that the Fed has provided going to ignite the employment market in the United States? And it has to. So this is going to be an important number. The ISM services are going to be an important number. Obviously, crude is going to be important for oil later on. Yeah. And it's really when we get to Friday that that we see the real numbers. Non-farm employment change from the States, the unemployment rate change, average earnings is going to be interesting as well. But we see it from Canada as well, and we've got a policy rate decision from the UK. All this points to the wrong day to trade to me, Ainsley. I don't know whether it's the same for you, but the wrong day to make a long-term position, or anything that goes into a week. After the US has announced what it's to announce, maybe there's a green light to go, or even Monday. We might even be looking at Monday before we can make a genuine assumption on this.
I think so, because sorry, Ashley, it's just like you said, most of the markets that you've just swung through, there's no traction, there's no direction, there's consolidation. Yeah. It doesn't know what it's doing, and as you rightly pointed out, people seem to be grasping a lot of straws trying to explain what has happened.
Yeah.
The rhetoric can be so different. You look at the price and you think, oh, okay, I can get some traction here, or maybe the market's breaking down early on the S&P.
Yeah.
It doesn't. It hit, as I said, it hit monthly pivot straight back up again.
Yeah, which is why I've just taken profit on that Ftse, because actually, and this is where the fundamental driver for me always trumps the technicals. Because if I look at the technicals here on the Ftse, I've got a massive move to the downside and potentially a lower high here, price under the pivots. That would suggest downside. But and I've got some breaks of trend lines as well. So I've got this area here, which also is just about running into that pivot line, and in actual fact, price is above that level. So that's possibly bullish. So maybe you could make a technical argument for upside. But we do have on the broader time frames a suggestion that this particular area is probably in an area that could come down. I think this is really interesting. This line's steeper than this. Here we go. I think this is really interesting because according to Dow theory and according to Dahlquist and Kirkpatrick and McGee and all these guys, this is a break of a primary trend line, and we are below it, which suggests a bear market. Mm-hmm. Now, this is what we have here as well. Now, don't get me wrong. I'm not making a case for the bear market, because the numbers don't suggest that we should be. But I do think that this is a really interesting pattern that can't really be ignored. That looks to me like the neckline around about there. It probably is potentially a little bit lower, actually. We could probably come down to this point here. So that looks to me like a left shoulder, a head, and a possible right shoulder. Now that leads the Ftse all the way down to 5,500. Now to get to from near 7,000 down to 5,500, so we're talking, more than a 20% drop in price. There has to be a coronavirus style news event to get us down here, I would have thought. I don't think it's going to be, slightly weaker numbers, or it might drift or whatever. But to get us all the way back down here again, that there's got to be a pretty big event. But there's no denying that we are through a very, very important technical level on the monthly chart, which is the primary trend line, the most important trend line, and we are seeing a potential head and shoulders pattern. So it's not actionable, in my opinion, but it is interesting, and I do think that that it needs to be taken note of. And what this would suggest to me is that it's not tradable to the downside, but if we do start to hear that there is something significant on the horizon, then we've got the green light, because technically speaking, we're in a primary downtrend. This is the high. This is a low, if you like. There's the high. There's the lower low. So this area on any other time frame would suggest the area for a lower high. Now that does sound like I'm being bearish, but I'm not. But I'm just saying that is
like you were.
that is a concerning looking picture to me.
But we're expecting a 20% drop, but as you said, it needs something cataclysmic.
Yes, it does. And I suppose this is the thing, isn't it? Is that if we were to trade on pure technicals, I think we could get ourselves in all sorts of trouble.
Yeah, and that's the thing, isn't it? Every chart that I've tried to trade lately, everything reverses.
Yeah.
Although, having said that, I'm in a bit of a pullback on oil at the moment. But oil's got a seasonal move to the upside.
Let's have a look at oil, because oil. I'm always interested in oil because of holding shares in BP.
No, in the white patch, down.
Oh yeah. Gotcha.
Got it. All right, so you're on a monthly there, obviously.
Yeah. What do you like? You like the 4 hourly, don't you?
I like the 4 hourly, and you can see that we're just getting a little bit of a pullback, but. We had a reasonable move last night in two phases, and obviously it hit $66. It's just
yeah.
And we're obviously at that level you need to come back, wait for it to come back a little bit. Excuse me.
Yeah, this $66 is a fascinating zone. I don't know.
It's a round number in a commodity. Hello.
Yeah, absolutely. I mean, I've heard a few people calling it for $70, but we have failed here before, haven't we? Here, and we're kind of back at that particular level.
A bit like gold with 1800. It's tried 4 times.
Yeah, well, yeah, gold's really interesting as well, isn't it? I mean, I've got still I've got my doubts on gold, but it's one of those that my concern with gold is that. I'm almost in danger of becoming a gold bull denier because it's not kind of doing anything, but
it's not doing difficult. What? You can see that. I mean, okay, let's run through that. You've got a double bottom there. You've got a lower high.
This high low here.
Yeah. High low.
Yeah, we've got a higher low there.
We've got a break of a level of resistance. You can see I'm just trying to put it on the chart for you. And then it's got a retest. So you've got your higher low. And then if you go through there, nice and straight.
We're going to go through here.
Yeah, pretty much through there. And look we've got a break, retest, and off it goes. Now, if I was to share my chart with all the little doobie whacker lines on it, you'll see exactly how. Share, and I'll move you out the way. Look, through here, double bottom, hit the level. Even last night came back. Now that's the 100 on the 4 hourly. There's somewhere in there, but that's in a zone. It's come back, touched the golden cross. Then we have all this. Then we have all this hooey nonsense that keeps just, getting in my way. I just would like it to go straight
I mean, when you look at that hooey nonsense, does it kind of like make you think actually it didn't break down? So even with all the
held.
hooey nonsense, it was still pushing higher. So actually,
Yeah,
that's probably
it's
a good
held.
sign, isn't it?
It is a good sign. And whilst look at you, you've got 1, 2, 3, 4, 5 attempts in the last month to try and get through the 1800 level.
Mm.
And like last night, it was the closest it came. It was 1799.93 or something like that on that bar there. Before we came rocketing back down.
Yeah,
To
yeah.
that was a little bit of a hello, what happened?
Yeah, and that is a nervous market, isn't it? I mean, that's when I look at that bar with no follow through, that suggests an event which created a very very nervous market, and this is my problem with gold, and this is why I am a bit of a bull denier. Really, is that the market appears to at this stage just want to rein in any moves to the upside in both gold and probably kind of back to equities as well. It seems to want to rein in the moves to the upside in this stuff. Now, this is the kind of market which destroys people's mentality because they're just not willing to wait and be patient. But
Yeah,
actually, if we are not so much on gold, because actually gold is starting to look like we should just be getting in and leaving it. But with things like Bitcoin and the S&P and the Nasdaq, it's just like people don't want to be patient for that move to the downside, which I think is probably going to come because we all want to buy Bitcoin, we all want to buy equities and stuff like that. But actually, maybe the price just isn't right, and there's that fear of missing out, of course. But I think it's more important to go. Let's be prepared to miss out and really wait for the price that we want, that we're looking for.
I was running through these charts the other day with Julian, and one of the things I had come to the conclusion with, as we were sort of like dissecting on a technical basis the Bitcoin charts, and obviously 1 hour daily and the 4 hourly are normally where we sort of play around in. But I said, that the profile of the typical Bitcoin trader, where everything's moving just so much more quickly and you've got a 24/7 market, you've got to get down onto that hourly chart to try and pick up the technicals. So that's sort of like the conclusion. Is like it'll have a move, and then it'll have a small retracement, test its levels, and then up, and then back and test its levels, and up, and then you have a reversal candle, and then back down again. And it's just watching it. It's, that huge move over the weekend where you saw it come back down.
Yeah.
And people were jumping in again because it hit 47,000 and bang, up it goes again. So just keeping an eye on those levels. One, the levels and the hourly chart seems to give a lot more clarity around the move. Whereas if you went to a gold chart on the hourly, you have a lot of nothing for a long time.
Mm.
You have these really big and then you've got that. But in general speaking, it's as you said, it's one of those financial assets where you're probably better off just holding and buying, whereas the opportunity to get in and out on Bitcoin is probably a little more applicable on a faster moving chart, whereas you die death a slow death on gold.
I guess that's the thing, isn't it? And maybe that's the point. Is it does depend on your particular appetite and the way that you want to interact with it. Because my views on Bitcoin is that that it's just the wrong price, and that's only because I don't want to trade it on the hourly. I kind of want to get in and just leave it alone.
But that's hard, isn't it, Ash? And unless you're on and I'm not on a Binance platform or anything like that. There's no way I'd leave a position on open over the weekend.
What, on Bitcoin?
Yeah, I wouldn't. Not when you can have 15% moves over the weekend.
Yeah, but but I suppose my personal view on it is that it's likely to go higher over a period of a year to to 2 to 3 years. So my personal idea with Bitcoin is to not even worry about the volatility and just say, will the price be higher by the time I want to sell it? And if I think it will, then I'm okay to get in, because I'm not using leverage. I'm not leveraging up on it. I'm just going to you know buy it and stake it and leave it alone. And that's the beauty of the cryptocurrency market, is the staking element. And I suppose that's the difference with the gold market, is that when you buy gold, at some point you've got to sell it to make money. Whereas with things like cryptocurrencies, that they've the powers that be that have created these opportunities in the crypto market have made it such a brilliant space, because they basically said, you buy this stuff and you stake it and we'll pay you. Which means that you go, well, all right, then, well, I won't sell any then. I'll never sell it. Which is why we're just having this kind of this this jam of people kind of cutting positions because they don't need to, and the returns on it are brilliant. They're 5 to 15% returns. Um,
Wow.
now you can get that on gold, but you have to trade gold as a cryptocurrency. So which is what I've done. I've actually, I have bought gold, and I have bought a gold cryptocurrency to get the returns on the gold cryptocurrency.
Right.
But to actually trade gold which to be fair, I have also had to do, because it wasn't so much gold that I wanted, but I did want silver, and I haven't found silver as a cryptocurrency. I think it's coming online, but it's not there yet.
Right.
But I wanted silver, so I've had to buy physical silver. But at some point, I've got to sell that position. But really, what I prefer is to have it as a cryptocurrency, see if gold can pop up to 3,000, 4,000, 5,000, and then be getting a 5% return on that value, having bought
Yeah.
it at
Okay.
1,700. Um, so there's a different way to play it, but do you know what I find fascinating about gold is that I feel the same in a way about gold as I do about cryptocurrencies, where um, gold may well stick and frustrate and come down and fluctuate and create huge volatility. But I know that over the course of however long, I don't know how long it could be 2 months, it could be 2 years, it could be 20. I know ultimately that gold will win out,
Mm.
because it always has.
Yeah.
And now I say that with obviously 99% confidence. There's got to be 1% where I don't know, of course, but I say that with 99% confidence because it's been around longer than the human race, and it's been interacting with the human race, ever since the start of time,
Yeah. I
effectively.
was going to say ad infinitum, but yeah, it to be able to get 5 to 15% because you've bought a crypto that's been staked is definitely a smart way to go.
Yeah, and this is why people love the stuff. And I suppose this is why people that hodl have got the opportunity to do that, because they're getting a return regardless of the way that they interact with it. Now, of course, you will get some coins which are just utter nonsense. Now, I don't know enough about Dogecoin, but I know your views on Dogecoin, and I make you probably right on the absolute uselessness of it. But it's the Dogecoin which ultimately, those types of things have got the potential to bring the crypto market down, because
They do now.
eventually,
Yeah.
yeah, because eventually that there will be governments, and central bank participants that will say this stuff needs regulating more heavily.
Yes.
We can't have this ridiculous move to the upside, crushing people and creating people that are just poor overnight, effectively.
Yeah.
So they will regulate it. They will do something. So
Sure.
the crypto market, I think the genuine crypto market creators don't want things like Dogecoin out there. They're very dangerous for the crypto market. They want things that are things that are genuinely created for the right reasons, not just rubbish that I mean, I think I heard yesterday that Elon Musk, in fact, it might have been Shukri said that Elon Musk has got a coin, and it's that kind of thing. You just go, because they are making it a game. It would be like it would be like you coming out with monopoly money and saying that you're going to start using it to buy stuff.
I wish I could, I've got it in the cupboard, but the 19-year-old who 8 years ago created Ethereum.
Yeah.
Hello, he became a billionaire this last week.
Yeah, I know, it is amazing, isn't it?
And you just sort of think, what was I doing at 27?
Yeah, I know, but you know what? This is the thing about this stuff is that yeah, John, you're absolutely right, mate. It is that anybody can make a coin, and it is the problem, because they and that's what people are doing, because you will get the irresponsible people that just want a quick hit, that are jumping on it and will try and create a coin and hope for the emergence of that coin just to kind of like hit 100x, like many of them have. But yeah, that 19-year-old was right place, right time. And right across the board, all of the stuff to do with cryptos, right place, right time. So if you'd got involved, and that's the almost slightly frustrating thing, you got involved in cryptos only 6 months ago, then your balance would have gone up by more than 10 times. So the where we sit right now, my issue with it slightly is where we sit like right now is that it's still too loved. I was at the pub the other day and I heard somebody going, "Oh, that was at the pub." Yeah. And I heard somebody saying, "Oh, I was thinking about selling my Bitcoin," and I thought, just the general guy now knows, general guy and girl knows what this stuff is and is interacting with it. So how can it have the same explosive moves when everybody's kind of involved? That now it's getting almost too liquid.
What's the old rule when you're getting stock tips from the taxi driver or the shoe shine guy?
It's time to get out.
Time to sell.
Yeah, exactly. And this is my point with it. And this is why when it comes down to this stuff, I think if you're not in already, you have to say, this isn't the right time for me, and I'm going to wait. And if I miss it, I miss it. Because there will be another opportunity at some point. So I think the stock market, the crypto market, and all this stuff could do with a bit of a breather. The news being the way it is right now does not suggest that it's going anywhere but up. But that's exactly when, as you just mentioned, I think it's exactly when you've got to be careful and watch out for the big moves.
And my thoughts on Dogecoin, and I know there is nothing. There is no net asset value. There is nothing. I know that it was created by 2 ex-IBMers as a joke.
Yeah,
I know that. And it was a joke. And it just goes to show what market manipulation, speculation can do. I mean, although this is pretty extreme. I mean, when you got a market cap of 50 billion from a joke, that kind of thing just, I mean, how can you look at that as an investment? Do you know what I'm saying, Ash? It's just...
Yeah, I do. I know exactly what you're saying. Yeah. I don't know. I mean, there are some brilliant things. They've got Cardano yesterday. Sorry, it's John saying something. No FOMO, people. If your taxi driver is in it, exactly. So Cardano were announced about smart contracts over in Africa and in Ethiopia, because many of those citizens in Africa don't have an identity, and this is where the crypto market becomes really positive, because what Cardano are doing is giving people an identity. So it means they can get a bank account, they can start getting loans, and they can potentially pull themselves out of poverty, because one of the reasons they can't get credit is because they have, as I say, they've got no history, they've got no identity. So this is where you look on the other side and you say, actually, when you do get something that's got a genuine use case and can and can change the world positively. This is what the stuff was created for. And the guy that created Cardano is the same guy that was one of the three that created Ethereum. And him and Gavin Wood split. So so there are some positive coins out there.
Yeah,
what's that you're looking at?
Keeping a little eye on oil at the moment. And she, like I said, it was pulling back, but that's been a very shallow retracement. I've been watching that for my 4-hourly bar, so I've been watching that for 8 hours, and that is actually just starting to pop back up. It came and had a little look back down around $66.
Yeah.
And in the last half an hour, it's popped back up again, 32 cents there. And that's a quick move.
Yeah.
So yeah, like I said, with oil at the moment, she is strong, and that was just nervousness from what was happening in India, because 400,000 cases a day, and they were just saying they're guesstimating the number of deaths because they can't keep up with it. The administration can't keep up with what's happening out in the car park as it is, and it's quite horrendous.
Yeah, absolutely is. I'm surprised, to be honest. I am surprised that we haven't had more of an impact, in the markets from the fallout from India.
I think, I read a friend of mine who is in India, who had a colleague who was sitting in with 135 CEOs, Secretary of State in the US, how they were just about to mobilize, and it's all underway now, because I got this text the other day, excuse me, about the aid that is going, and it was just like 135 CEOs, IBM, Google, Amazon, and I'm just saying, this is the 6th largest economy in the world. It needs support, otherwise it's going to impact all of us.
Yeah.
But as you said, it's interesting to see it. Now, obviously, we saw that down move at the end of last week, because India was coming out with horrendous numbers, and there was that jittery aspect of what was happening, but it stabilized, supported completely by the pivot, and then it's taken off again. Now, you're talking about Italy being in lockdown again, but it was only last night I was hearing about Italy and Greece plan on opening for vaccinated tourists for June. Sorry, we can't actually leave the country anymore at the moment.
Oh, you can't? You're on a travel ban, are you?
Our borders have been locked down since March last year. We can go to New Zealand now, and New Zealand can come to us, which is how I ended up with Paul in my dining room last Sunday night. But we can't go anywhere unless you've got exceptions or work reasons, but that's where you go, and you come back and you've got to sit down and do your 2-week hotel quarantine.
Right.
But Australia had tried to ban people citizens coming home from India, and threatened jail time and fines, which was pretty steep. It's just like, oh, for God's sake, people just want to be safe. They just want to come home. You can understand that.
Yeah.
So it is dire, but I think with, you're talking EU, the US still seem to think there is no such thing as a pandemic, but all these countries are talking about, and this is where all this news has gone, well, more jets and I was reading the reports from oil price, and it's the optimism of not just the economies starting to get a bit of traction and opening up. It is more the travel. It is the travel. It's getting those jets in obviously big users of fuel, getting those jets in the air. And that's where the whole EU opening up and the US opening up, and some more travel bubbles. Singapore is going to be a stop-start, because they've had 30 new cases, locally transmitted cases, happen in the last 2 days, and they were meant to open with Hong Kong on the 26th of May. So that possibly will stop-start. I'm sure somebody will be able to tell me how many exactly, but it was just the reason we know about it, because Singapore is trying desperately to get the travel bubble to be included in the Australian-New Zealand travel bubble as well.
Right.
I don't know if that's purely sponsored by Paul, so we could all go up there and do a live event.
Yeah, it's interesting, isn't it, actually, because I don't think anybody assumed that it would take quite as long when things started to move again and when the vaccines started to roll out to get things moving. But I think we're looking at least another year. I don't think anything's going to happen by the end of this year now.
I think you sort of live in that hope, and that's one of the things I can see, particularly with oil. It's the hope. It's the, oh, we get some bad news and we have this horrendous move. It's not just a trickle. It's not a shallow retracement. It's quite a substantial retracement back. And then it sort of sits there for a bit and it hangs on the next OPEC meeting, who's doing what. And all of a sudden it's like, oh, is that good news? Oh, good. I can take off. So it is being particularly fickle with that kind of information.
Yeah.
So, yeah, it's as I said, to get traction and to trade a chart at the moment completely technically, you got to get yourself whooped, I reckon. And I agree, just get yourself whooped. And whilst I love technicals and I need that, oh, look, I've got Bloomberg in one ear and the research I'm trying to keep on top of at the other, just to see, well, okay, how do you think that could be interpreted?
Yeah.
Like that gold move after the S&P move, it was just, it was you pulled up the 5-minute chart and it happened in 5 minutes.
Well, this is the thing, isn't it? There's different moves in the market. You've got the overall kind of sentiment move, and then you've got the knee-jerk reaction moves. And those knee-jerk reaction moves tend to be good buying opportunities. My slight issue with it right now is that the knee-jerk reaction moves appear to be at a market top or near it. So this is why the knee-jerk reaction could turn into something a bit deeper. And really what I'm looking for now, so far that it hasn't broken down, but I've seen this before, and it's interesting because this is almost the time that I guess looking at the sentiment indicator, the sentiment cycle, that it's that kind of far. It feels like that last confident kind of push to the upside where people are still buying the dips for one final time. Now I'm not comfortable doing that, but it's not because I don't think it's going higher. I think it probably is, but I don't think it's going too much higher because there are enough signals to suggest that there could be just a bit of a leveling off coming. John's saying that.
Look at that. It's just, it hasn't gone anywhere.
Yeah, exactly. Yeah, and
people here in this area here in September, October last year must have thought, here we go. We've got a break below the close here.
Yeah.
Double top. Yeah. We must be going. And it just turned around and off it went again.
Off it went. And do you know what I find really interesting about that particular chart you've got there? Is that a daily?
This is weekly, honey.
It's a weekly. So what's even more interesting now is that you're looking at a weekly chart, and those last 3 bars in comparison to just about every other bar on that screen are tiny. So it just shows the lack of commitment now and the lack of momentum that, you don't need a momentum indicator to tell you that there's no momentum to the upside just by looking at those 3 bars.
But also it's reporting season and people seem to be, because people are invested, are so much more aware, right, of what is happening with reporting season. Is that an element that you need to consider as well? Because look at this. You've got a monthly, you've got to come back. We've touched, this is the daily.
Yeah.
Last night came back, bounced off the monthly pivot, and if you've got a close tomorrow above, this 41.95 area, that's a ring low bouncing off a level of support.
Yeah.
That's a buy signal.
Yes, exactly. And this is the thing, and this is what I'm saying about the technicals. The technicals in this environment, I'm finding a bit difficult to read, and I suppose it's because until I get my pullback, and I'm a bit of a stickler for this, until I get the price that I want, I'm not really as interested in taking anything specific, I've still got an Aussie yen short in the market, and I've been holding that now for everybody knows that I got in a few weeks ago, and we eventually got stopped out. But I've taken another Aussie yen short, and I've been holding that for a week, and it's gone nowhere. And yesterday I thought we were starting to go somewhere, then it pops back up to the upside again. But I'm just waiting. But then the reason and one of the reasons I closed the Ftse trade is because I've already got my opinion expressed by this Aussie yen short, and my opinion is that we're coming down on asset on risk on. I think we're going to get a little bit risk off for a while. So I've expressed my opinion with this Aussie yen. So everything else that I do the same with, I've got to be more careful, because then I start doubling up my my potential risk. So where I took a Ftse short, I was like, fine, let's get the stop at break even straight away, and if it starts to come back, we'll close the position, which we've done. But I'm still risk off at the minute, and I'm still looking for this Aussie yen to come down. And if I don't, if I may have to hedge to the upside, but at least I've got something that is expressing downside right now. And now it's just a case of, how can I hedge the position just in case it pops to the upside one more time?
I don't know, because I'm looking at this weekly chart here,
yeah,
and this is doing a really good imitation of a picket fence.
Yeah, yeah, it is. Yeah.
There is no price action.
No, there's no action. Yeah, you're right.
Absolutely nothing there.
Yeah.
And when you can see it here as clear as day, and it's
that's a lovely chart pattern, that, eh? You know what, the picket fence pattern. We need to now know which way does the picket fence pattern go.
Which way did the gate open?
Exactly, and then we can write a whole course. We'll write a whole course on it, and put it and contact Steve Nissen and say that we've got a new pattern for you, Steve.
It's called the picket fence.
Yeah, the picket fence. That's a really good pattern. I like that. And do you know what? With that picket fence, I quite like the fact that it is kind of holding. It's a holding pattern. Can't go through it. Can't go through the picket fence.
To jets and oil.
yeah.
Holding patterns.
That is very good. So I mean, you can see that on the chart. But you see, I am not trading this on the technicals. Yes, my entry was a technical entry, which it was just gone nowhere. But my reasoning for holding on to it is more fundamental. I've got a view that we're a bit overvalued in the stock market. I've got an Aussie dollar, which is according to COT data, still still as yet hasn't been sold off sufficiently to kind of like unwind some of the short positions. I've got a Japanese yen, which is quite the opposite. I've got the seasonal aspect of the Aussie, which does tend to weaken right up until around about June. And I've got the yen's a little bit sticky because it doesn't really strengthen until the middle of May. But still, as long as it starts a little bit of momentum from here, then maybe it starts to pick up a bit of pace later down the line. And look at that pattern as well. That on the right hand chart.
Let's call this the picket fence with an arbor and more picket fence.
The one on the right, though, eh? Look at the one on the far right. That's
okay. Another picket fence. This is the monthly.
Oh, not that one. Sorry, no, the one before the monthly.
Weekly.
That one there, the weekly. Yeah, look at that
monthly,
head and shoulders on the
daily,
weekly.
4 hourly. Yeah.
So the weekly's got that head and shoulders pattern, which also I like. So technically speaking, there is something to like about this.
That's also called a lot of consolidation, which is highlighted by picket fence over here to the right.
Yeah.
Picket fence, arbor, picket fence.
Yeah, there's a few picket fences in there, but
there are. And look at, let's just run through these. This daily, this is we've had this pullback, and then it's completely reversed, and still you've got to say it's an uptrend.
Yeah, but the daily showing a head and shoulders, which I quite like.
Okay.
A bit of distribution going on. There's definitely some distribution going on, I think, against the yen.
So there's dollar yen, and like I said, most of these you get to a certain level thinking that you have got some traction, and it's completely and suddenly reversed. It's a sharp reversal.
Yeah.
Well, I'm looking at that. So even that one down there where you've got, train tracks, even though they're little, but bouncing off the 50 but it doesn't go
But
anywhere.
do you know what though? And this is the way I feel about gold as well. And what I'm looking at is that the reason I'm holding on to the Aussie yen is that we've been so quiet recently with the market, just not able to go anywhere. I know that eventually I am going to get a genuine result out of this. Now it's either going to go my way massively or it's going to go against me massively, but no problem because the stop loss is in place on one of them, on one of the accounts. So it's not a big deal. So all this kind of fluff, in some respects, if you take a longer term view on it, I think it's fine to trade. But if you're taking a short term view, this is the stuff that runs you over because you look at it and you go, oh, it's missed. Okay, close the trade. Missed again, close the trade. So I think a bit of patience here is the way to play it. And as I say, holding on to some positions that express your view. Don't over leverage when it comes down to taking the trade, because you might be wrong in the directional bias. But if you have a directional bias, my personal view is that I'd like to get in here and just leave it and let the market do its thing. And right now, the thing it wants to do is nothing. It's sleeping. But we all know what happens when you wake up a bear, and that's or a bull. That's what I'm looking at. I'm looking at a beast which is currently sleeping, but the beast will wake up, and when the beast wakes up, I don't want to have to make a decision. I'll just if I'm on board, I don't have to do anything.
True. Although
because it'll just go, and I wonder whether anybody will have a chance to get involved.
Well, this is the thing. Look at this bar as far as how many inside bars do you think we're going to have out of that?
Yeah.
Holy Moses. So that is now, as you said, almost impossible to trade when the high's taken out, when the low's taken out. And it's just like, when will that be?
Yeah.
Because it's just sitting here chewing its thumb. I was going to say chewing its cud, but that's a very Australian thing to be saying, because it's just all going sideways.
Yeah.
Can't. But let's just have a quick flick before it's gone 6 o'clock. So let's have a look. The euro's gone to the downside. Like I said, I mean, I expect it's probably going to come and have a look down here for that level of resistance, a level of support. But at the moment, we thought, as you said, you pointed out all that news that's coming out, and the ADP is important, non-farm payrolls as well, plus for me, crude oil inventories. It's just as quickly for that information to reverse that we've got. Is it just saying, is this just a shallow retracement? It's come back down. You've got on the daily a massive ringed high. You can see it here bouncing off resistance. And on a technical basis, yes, it's come down. It's come all the way down to the break of the neck here. So ringed high, bouncing off a level, and then down at traced. And it's just this drifting, it's not 3 bars up and then down, 3 bars up and then down.
I tell you what, though, where I find that quite fascinating is the not the euro aspect of that, but the dollar aspect of it, because the dollar index is starting to show, again, it's starting to show some accumulation. When you look at that weekly, that weekly looks to me like a potential higher low there. Now, if that is the case, we've had that move. Is that a higher low that we're currently in? The most recent, but last week's bar, the engulfing bar, is that carving out a higher low? That one, And we need to watch the dollar, because the dollar boosts. If the dollar boosts to the upside, we're going to see all of the other things come down. But I think most significantly, the Nasdaq and the S&P and the Dow are gonna drop. Now, the dollar, again, seasonally should be strong, and it just has had no love whatsoever. And we know things eventually run out of hate. The downward energy will eventually run out for the dollar. Now, we don't know how high it's going to boost, or even if it's here, but at some point that dollar is going to go again, because yes, it's an absolute peg of a currency, but they all are. So when we compare it to the euro or the pound or the Swissy or the Aussie or the Kiwi, then it doesn't look as bad. Fiat currencies aren't very good. But the dollar's a fiat currency, and if we compare it against the other fiat currencies, then is it the worst? I would suggest not. So the dollar is going to get a boost at some point, and at that point, then we'll see the equity market come down, and who knows what the trigger for that is going to be. I mean, it doesn't appear to be what Jerome Powell's going to say, but at some point, people are going to start looking at the numbers and going, well, he has to move. He might say he's not going to move, but he has to move because the market is the US economy is going to start to overheat, which is the point that Janet Yellen was making yesterday.
Yeah.
You can't continue to have good numbers without any kind of reaction, to make sure that the economy doesn't overheat. It's just not possible, because otherwise you'd be the most impressive economy in history if you didn't have to control the value of money, and you could just keep your economy, the value of money really, really cheap, and all your goods and services were sold across the world because they're so cheap. It just doesn't happen, because look at what's happened with China. Even China eventually are becoming more expensive because they're stepping into the 21st century.
Yeah. That's another play altogether. I mean, they had to step into their own stock market a couple of weeks ago because it was getting quite overheated.
Right.
So, they've had to do that and calm it down. But I mean, again, looking at on the technicals, look, you got an inside bar. Yesterday was an inside bar for this. So, again, suggesting waiting, holding patterns, waiting for information to come out. There is no strong move either way. Even with what happened on the stock market.
Yeah. Well, my rule is watch out Friday. If Friday's good numbers, then don't worry about missing the dollar on the first bounce, because it's going to keep going. That's my view.
I ho silver away.
Yeah, that is my view. My view is that it depends on the numbers will probably come out and be an absolute damp squib, as they most often are. But if those numbers are stellar, then that could be the trigger. But I suppose this is my point. I just don't know what the trigger is going to be, but this market will move at some point. I don't know what direction, and I don't know what the trigger is, but it's going to move. So I'm happy to get involved and just leave things alone. John's in the same trade. Yeah. Holding, sitting tight. I think that's the rule, mate. And by the way, if you come back to the UK in July or August next year and you're anywhere near me, then let me know, mate, and we'll hook up. If you manage to get to Brighton for a day or so, we'll hook up. Anyway, we'll be in danger of talking until tomorrow, or maybe even till Friday, and then we'll see the move happen live. You've been Brighton. Oh, mate. Well, then let me know when you're coming. Let me know when you. I've got a really cool new bar down at the bottom of my road called the View. I think it's called.
He's a yuppie though, John. He lives in Hove, and it's very.
Oh, do you live in Hove? Hove is lovely. It's a really nice place to live.
Apparently, it is.
Oh, it's just chilled out. It's just chilled out, eh? Even though we did have a bit of a ruckus outside the house a couple of days ago. So
did you take a hose to them?
What's that? Sorry.
Did you take a hose to them?
No, but after thinking about it in more detail, I wish I had. It's Hove's like really nice, but it's a city, so it's still got an edge. You've still got the problems that all cities have. So yeah.
So true.
Anyway, let's wrap it up. Thank you so much, It's been really good. I've really enjoyed it.
Just be careful out there, guys. Just be really careful.
Yeah,
I've been trading with tight stops actually. If I was trading currencies, but I'm avoiding currencies just at the moment. But just see how we go.
Yeah, watch that risk management. Absolutely right. Watch out for your risk management, and or do nothing. It's okay to do nothing. There's no volatility now. If you're a short-term trader, this is exactly the market you do not want to be involved in.
Oh, no
volatility. In fact, it's volatile, but it's volatile for about 5 minutes, and then it just calms down again. So yeah,
Like
be really careful. Yeah,
go to the
flashes.
bathroom and see what happens. But I mean, one of my indicators for me when I'm looking at stuff is when my 20 and my 50 are stitching like that, EMAs, that's not a trend. That's just, they're flat, they're not going anywhere. You know, a trend is the 20 and the 50 moving apart. And you haven't got that. You flick through a lot of them, go look for your picket fences because they're definitely out there at the moment. And it's last week and this week as well. So just be careful out there. There is no trend.
I'm currently looking up John. Is that your buddy's band? Is it John? The Prototypes. The Prototypes is a great name. What a great name for a band.
So is Dogecoin.
It will happen, eh? It will happen. There will be something that goes out with it. Okay, fantastic. All right, thanks, guys. I'm going to check out the Prototypes, and I'll let you know tomorrow, John. And we'll be in with Jeff, I believe, tomorrow. Now, Jeff was meant to do the quiz, but he's been obviously away, so I'm not sure whether he's going to have any questions. So if he doesn't do it, then I will do the quiz. And if you want to join us again, tomorrow for the quiz, you are more than welcome.
I got a little carried away. There was some tricky questions in there.
There are always tricky questions.
Excellent.
Yeah. So if you want to get involved tomorrow, the quiz will be on. Okay, guys, we'll see you tomorrow morning. Thanks so much for listening, as always. And I will quote the great man for the last time this week because he'll be back to say it